A topic that I come across quite a lot is scaling in and out of your trades, when to, how to, etc. And this is something I find quite a lot with people relatively new to the markets, is they're not too sure as to when they should be buying extra positions into a trade effectively, which leads to a lot of people losing extra money. So, for example, I thought I'd give you is this GBP JPY, which I was in short positions for, but I've recently just been stopped out probably about 5 minutes ago now. Um, Now with this, so I got my entries in here of the rejection of the zone. Now, as it started going into more and more drawdown, I know a lot of people would have started adding extra positions into this, thinking, oh, when it curves, I'm going to get more profit when you come out the other side. Not necessarily true. If you're buying into a trade that's in drawdown, without seeing added confluences and basically other reasons why you'd be getting into the trade in the first place, you're effectively just buying into a losing trade. So in this case, the only time I would have taken extra positions would have been at this 15-minute ascending channel, which I believe initially I had set sort of around there. As we can see, we broke out of it and we shot up and hit my stop loss. Um, but with this, the only time I would have taken extra positions is if we started seeing a bearish candle on this 15-minute candle at 115, pushing away from this spinning top that we had at the top of the channel. Unfortunately, we didn't see that, and like I said, we have been stopped out since then. But so that's effectively why I don't buy into a losing trade, into a trade and drawdown, because you're buying into a losing trade at that point. So unless you're seeing confluence and added sort of extra reasoning to be getting into a trade, and you're seeing extra positions appearing, like you see extra zones, for example, don't get into a trade if it's in drawdown. Now, an example of scaling into a trade that's winning, I'll show you Euro US dollar. So this was my original setup. We had the head and shoulders, we had the break of the neckline, the retest, and I believe I got in on this candle here on test of the trend line with stop loss set just above here or something like that. Then we see the curve, the fall, and that's our initial entries in profit now. Then we have this zone that gets created here. And as you can see, we sort of hovered around this zone quite a bit. We can see we had a fake out of the zone and then a retest of the zone before another drive down. Now I scaled in further entries here. Um, so that's my second set of entries now. So we've got our original entries, then we've got our scaled in entries. We then break, we continue to push down, ignore this line. We continue to push down, we create this next zone here, break through it, and as you can see, we consolidate around it. We see us just lingering around. At this point, I've got further sales in around sort of somewhere around this point. And then we see we have to drive down during the day. This was yesterday, Monday, the 6th of April, I believe, before finding support upheld at, I believe this is a daily channel or maybe even a weekly channel that's running along here. And we found support there and rejected it and flew straight up. So I took a loss effectively on this position, but I took a win on this and this position. I closed my trades, I think, just as we broke out here. So probably somewhere around here. Um, So that's how you scale into a trade. You basically just want to find other entries. So looking at this, I know a lot of people would have just taken their original entries and just let it run all the way until they cashed out. If you're doing that, all very well and good. But if you're seeing reason to get other entries in, like you're seeing an entry reason here, or you're seeing an entry reason here, which say you hadn't got your entries in up here, you would have got your entries in up here. At that point, you're just missing another trade because that, in a sense, becomes a separate trade. It's a separate setup, but it's running on the same pair. Therefore, I would have taken that as well. Well, I did take them positions as well. But this one, like I said, unfortunately just went wrong because we just came down here and we just found support and rejected and came up. But that's effectively how you're going to scale into trades. You look for further setups as your pair's moving, and don't just buy into drawdown for no reason, just for the sake of thinking extra profit when it turns. If you see reason to buy in and you see confluence in the drawdown, feel free, by all means, go ahead and get your extra positions in, etc. But when we're falling, when we're actually sort of in your winning trade and you're deep in profit and you're seeing more positions present themselves, by all means, scale in on that as well. Do not miss them opportunities in the market because at that point you're basically just missing your entry zones. If everything meets your criteria or your trading plan criteria, you should be executing them trades effectively. So yeah, I think that's pretty much everything covered. So I'll catch you lot in tomorrow's podcast.